Hello, greetings, and salutations. Welcome back to the BFC, where we go into the trenches of the trading world. I hope you guys are having a wonderful Monday. Yes, if my voice taps out, I'm still sick. But that's why I postponed it to today. But hey, we got to just keep going. I don't want to make Jeff James wait any longer. Really been anticipating this interview for a long time. And we're going to talk about a bunch of other stocks afterwards. So make sure you hang around. And guys, if you're watching this, share it. Share the video and like it and get it out there and get as many people into this chat as we possibly can. And speaking of the chat, that's why we're here to do live due diligence. So put your questions, put your comments in the chat. Even if you're on X, I will see your comments. If you're on Facebook, can't respond to you on Facebook, but I can still see your questions and comments. So listen, I don't want to waste any more time. OTCID, ticker PKLE, man, since they last presented on at the BFCVC3, this stock has went up, I think, 400+%. It's been doing very, very well. And I'm excited because it's a music stock. So I don't want to waste any more time. Let's bring in the founder and CEO of PickleJar, ticker PKLE, Mr. Jeff James. Jeff, welcome. I think this is our first interview, correct?
Second, but yeah, I think the first on camera. So we did one a while back, but great to see you again.
Yeah, I think that was a Spaces that we did.
That's right.
Yeah, that was a Spaces. Might be right.
Yep.
So this is the official podcast maiden voyage for you, man. So
that's right.
So welcome.
There you go.
You guys have had a lot going on, and listen, for someone hearing about PickleJar for the first time, maybe it hit their stock scanner with the surge in price and volume. What exactly do you do, and how do you make money? What's going on at PickleJar?
Great question. I'll kind of back into that a little bit. Those of you who've been with us for a long time, I think you'd look at the last 7-12 months as really about building our foundation and everything that we do. We started this company 4 years ago with the clear idea that we wanted to put artists first. How do artists make more money? And that clearly has grown to mean a whole lot of different things to different market segments. So today we're in a lot of different areas. We have basically one of our core areas is venue managed services. This is ticketing, event management, on-premise digital advertising at venues, as well as in a sundry of other services. We still have our direct to consumer platform, which is PickleJar Live, that we make money off of transactions, fan-funded transactions, if you will, as money is moving from artists to fans and fans to artists. And then lastly, really on the advertising side, our radio show, right, which has done exceedingly well on 84 stations today, expanding that network. So if you look at the last 3 years of the company, we really have been on a long-tailed audit, finally got that completed. And I think from an industry standard perspective in the public world, it really does set the predicate for where we're going next. And that really isn't the number one headline, but it's definitely the headline is that the unit economics of our business are no longer on a slide deck, right? They're in a PCOAB audit. And that's really been important to us to get it right and do it right the first time. So, the next 24 months for us is all about execution on 4 pillars. Again, more audited financials. We literally are in the process of getting, filing and getting the company fully reporting, defined capital plan. And we're in active due diligence around that today. We certainly have a regulatory tailwind behind us that our industry has never seen and hasn't existed in really a generation with the DOJ and Live Nation and Ticketmaster situation that's gone on, and really also a validated technology platform that's ready to scale. So happy to answer any questions, but really that's really kind of a quick overview of how we got here and really what we do on a day-to-day basis.
Right on, and I am going to bring up Live Nation in a second. But when you zoom out, maybe this could help people understand what is PickleJar ultimately becoming over the next 2 to 3 years?
Yeah, so think of us as the operating system for independent live music venues, right? So if you scale out, most of the independent venues and the artists are the same caliber artists that are playing, in a scaled up. But they're on their way up, right? They're the up and comers. And so what we're doing is providing the same caliber of tools that the major players have, but built those so the venue and the artist can actually own their data and keep the unit economics down for every event that they do. So we make money in 4 ways: ticket transaction fees, sponsorship and advertising from our nationally syndicated radio show, recurring software revenue from our fan engagement platform, and then payment processing margins, right? Ticketing is the workhorse today. And if you think of our radio show is scaling as we grow that. So those are really the 2 core areas of focus for 2025 or 2026 and 2027.
So you say ticketing is driving the bulk of the revenue?
Yeah, if you look at the audited financials that were just put out, you can see how that framework looks. That is really kind of the lead dog. So you're going in, and just think of it this way: the larger players that are in this space, whether it's Eventbrite or Ticket Spice or pick one, right? One, the data ownership is very stagnated, number one, and number two, the costs are high. So we've taken both of those and limited them, and also tied in our marketing platform, FanVivo. So that's really going to become the transactional workhorse, but that's not really the highest margin model there.
Okay, and I do want to ask about Live Nation. With the recent developments involving Live Nation and Ticketmaster, how big of an opportunity is this moment for PickleJar?
So this is a moment of significant industry tailwind that we saw coming, and we were pretty excited about it. The DOJ action and the broader scrutiny has forced a conversation with independent venues that we just haven't had, but we've been wanting to have for the better part of a decade. The real question that these venue owners have is, do I still have to do business this way, right? And this way, we had a lot of constraints around it, and a lot of, quite frankly, now we know, right, illegal practices from a monopoly perspective. So for years, the answer was effectively yes. So if you think about the parallels here to the telecom industry, this literally is about establishing companies like PickleJar as a credible alternative, where we built specific products, specific unique features within our product, and can help those independent operators take better advantage of their market share in the market. So that's the gap we fill. Now, we're not trying to compete with Live Nation. We're not trying to do a Madison Square Garden event. We are built for that 1,500 room cap in Nashville, or the brewery in Denver, or the festival in Napa Valley, where unique opportunities present themselves to really connect fans with artists and venues, where that sequence happens.
Oh yeah, and I'll tell you, there's a lot of those venues, and especially in the Buffalo, New York area, the Western New York area, big music scene up here. And so across the country, you have tons of venues that you could tap into. So right. It's not really about destroying the big guy, because you got your own market to contend with, which is great.
Yeah, so historically, I've had a lot of experience in the telecom industry, and so for those of you who are shareholders and investors that can ladder back to when competitive local exchange carriers were opened up for the 1996 Telecom Act, even if Live Nation is never broken up, right? The regulatory environment today, right, is making music venues comfortable with asking, hey, I'd like to try something else. How do I do that? And that really is the door opening for us. And that's really where the opportunity come in. Our job is obvious, right? We step in there and we basically say, hey, here's an alternative, but here's alternative features. Here's your data. Here's other alternative ways to generate revenue. And so our audited financials, a public listing, our validated technology, and more importantly, and I like to brag on our team that really has done all of the yeoman's work over the last 4 years on this, specifically with a heart dedicated to the live music industry. That's how we're going to be walking through that door in the coming months.
Excellent. And I do gotta say, I know I'm not trying to get you to talk about the stock, but since you last presented here, I mean, the stock's up over 400%. You guys closed over 2 cents. Do you think the market's sort of starting to connect the dots? You think the audit helped boost that a little bit? Because a lot of times we hear from companies, the audit's on its way, audit never comes,
Right.
And so I think I'll just say it, like a lot of OTC traders, when they hear that, they're like, yeah, bullshit. It'll happen when it happens. Is it going to happen? But I think, you guys laid that one on, and you're already working on 2025. So it's like, that's a momentum kicker right there. I love it.
Yeah, I appreciate the compliment, and I have to be obviously careful about my answers here as this public company CEO. and to comment on any of the near-term stock price movement. But I will tell you, I do take my job, and my team takes our company very seriously. And I personally have put in a significant amount of capital to meet that commitment that we said, 24 months ago when we started down this road that we would do it, right? And I've had a lot of people go, "When's it going to happen?" Like you said, but this team has committed to doing it. And when we say we're going to do something, it's we're going to do it or die trying. That's who we are. And what I can speak to is structurally and culturally what's changed within our organization. So, we went through as a private company, and really had not ever anticipated going into a public company. And so that transition has added more people, and of course, certainly added a different perspective and a different rigor, if you will. And I think a year ago, we were the story. Today, we're a story with audited financials, right? And a defined capital plan and an investment partner doing active due diligence right now. And more importantly, a clear set of catalysts sitting right in front of us. So I would say we think investors are recognizing a couple of things. One, our market penetration and some successes there, but more importantly, our tenacity. And we've got a lot of tenacity on this team. There's just not a lot of quit in us. So we're going to keep building and keep doing what we do, and we certainly appreciate the shareholders responding to that the way they have. The market price will do what it does, but our job is just to keep delivering.
Awesome. Excellent. I want to talk about, you emphasize that your venues own 100% of their fan data on your platform. Why is that such a big deal? Explain it to us like we're five, I guess. How does that translate into real revenue for them?
Well, let's just say it this way. Where the biggest problem that you have today in the industry is that there's a live music venue is probably using 4 to 6 different platforms, right? And they've got a marketing manager, a booking agent, a GM, right? And so those 3 or 4 people are managing 4 to 5, 6 different platforms. And so what we learned very early on was the ticketing engine was not directly connected to any other marketing engine out there. And so by creating our own FanVivo platform, connecting the ticketing engine in through there where triggers are created, now by owning that data, the venue can set up marketing automation, can better understand what their customer base is responding to online. We don't want to get in the middle of that. We're not the owner of their data. And more importantly, they're sharing that data with the artist, right? The more people who have the data and can show activation on it, the more people are showing up on a Friday night. It's not just understood, it's empirically determined, right? We know that's how it works. And so, giving that customer a 360-degree view of the fan and then giving them the ability to do it seamlessly and frictionlessly to market to them, that really is where the value is. And again, hey, these live music venues don't stay alive, right? Where's the live music going to play? And we saw that play out during COVID. So, it's all about making sure these venues have all of the best tools to compete in the marketplace of live music.
Great. I love the sound of that, especially, being in that scene myself and, knowing a lot of people that are the people that you're talking about. So, I want to talk about the radio station for a little bit. You guys, the show, I should say, not the station. There's many stations, but you've expanded quickly, to 80 plus stations. I think 84 is what you said, right?
Yep.
And so what does success look like from here, and how important is radio versus driving users into the app? And when you have, I looked up, you have Katie Cook, you have Scott Gaines, so you have people really, that's awesome to have those guys a part of this. So talk a little bit about them. Talk about what this means from here.
So radio is a means, but not an end, right? So if you think about the 80 plus stations that we're on today, that's distribution we couldn't have built in the same time frame or the window, right, in any other mechanism. It cost us millions of dollars from an advertising perspective to touch and reach the communities that we're in front of now. So those radio station partners are a key component of what we're doing. And right now it's centrally focused in country music, right? We've got other plans for other market opportunities or other genre opportunities. But the real success from here is 2 things. One is we keep growing that station count. We keep converting that into sponsorship revenue. And that's real, that's immediate. That's what you're going to see really here in the next 2 quarters of this year. But the show is a top of funnel model, right? Every show, every property that we launch out, every episode is a chance to introduce our radio listeners, artists, fans, and venues, right, to what the PickleJar brand is really doing. So that really was, it's like, think of ESPN, if ESPN was an app and then launched its own TV show, right? Where people are like, oh, okay, now I see what ESPN stands for. Maybe I'll go download the app. And so driving those listeners from the show into our ecosystem through partnerships with the labels and with the artists themselves, building that network density, that's what makes this even more valuable. And our partners at LRN, Local Radio Network, our partners at Midwest have just been such great partners in helping us build this. And it is a meaningful P&L line item for us. But at a larger role, it's about lowering our customer cost of acquisition, both at the venue level as well as at the artist and fan level.
Excellent. I have a question here from Stephanie Spear. Do you have venues, artists reaching out to you, or do you have a marketing team reaching out to them?
Both. So it's a push-pull. We definitely get requests coming in all the time that we reach out to. Artists are a little bit simpler. Unless they're going to the radio. Some of them go to picklejarupallnight.com and submit their song, right, to be on the air, which is great, which is a great way to kind of give them notoriety. Venues reach out through our venue managed services subdomain on our website. And the other part of that is there's a lot of word of mouth in this industry. And so constantly I'm getting pinged with, even a text message or a phone call saying, hey, so-and-so told me, can you have somebody give me a call? So we're really happy about the way that works. And then we have several of our team members that just do nothing but customer success and do outreach to those live music venues.
Great answer, Stephanie. Great question. I want to sort of piggyback on what she asked. How long does it take to go from that conversation to actual onboarding? Really
great question. It varies, obviously, depending on where we start in the conversation and where we end up. It also depends on another variable is the ownership structure, believe it or not, right? Does this ownership structure represent multiple venues, which we've seen more and more happen post-COVID? And so now you're talking to multiple partners, or if we're just dealing with, and the last variable is, are we dealing with a real problem? So, for example, one of the venues that we just turned up, their problem was ticketing. The other ticketing platform went down, or they're going to charge us and change their fee structure. Can you guys come in next week and do ticketing for us, right? So, but normally we'll see a 30 to 60 day timeline from discovery conversation to the technical walkthrough, and then the number of products that they're buying, right? Are they doing broadband with us? Are they doing just the ticketing with us? Are they doing other things? And then of course the staff training. Those are kind of the things that happen during that onboarding process.
Thank you for answering that. I want to ask about the audited financials. I'm going to come back to that a little bit.
Can I answer one more thing on that?
Absolutely. The floor is yours, man. You could say whatever.
It just dawned on me because I heard somebody say this to me the other day. Our model, I don't think of it this way, but it was a good analogy. Our model emulates the Toast model, right? So if you're familiar with Toast point of sale system, when we go in, it's repeatable, it's validated in motion, right? We're working them through gates. And so I think because so many of these live music venues have moved to, a Toast type product or a Shift 4 Redux, they're very familiar with the onboarding process. And so that has really kind of made it a little bit easier from our side, just other market forces and changes on that side of the business.
Yeah, it really is a total scalable business.
Yep. Yeah. And some of it's just self-serve, right? You log in, you plug in your own information and you're good to go.
Yeah. And the nice thing is, you could take that formula and you could apply it from market to market to market. And I don't want to say it's a one size fits all. Obviously, demographics have their own set of issues, but you have a model that could work across all landscapes.
Well, that's exactly what we're in the process of doing right now, right? We have a rinse and repeat kind of model. Now it's how do you scale it aggressively, or do we let the show in markets we're in, right? These 80 different markets kind of feed to us, or do we, go on the bleeding edge and push harder? So There's some announcements we'll make about that in the coming months, but those are good problems to have.
Absolutely.
If you look at the business, so.
Yeah, and that's a beautiful thing about being a public company. It really helps you scale a little more quickly, so that you have your benefits there for sure.
Right.
And I want to ask you. I want to go back into the audited financials again. What's the number that people should be walking away? What should stand out to them? I guess that's my question. Like,
yeah, I think the biggest thing that stands out to me, if you go back through that, and I'm just going to I want to pull some numbers here right now. So if you look back at 2023, 2024, the 20 venues that we started in, the $500,000 in revenue that we were generating just off of that, right? That's a great number. It's not just a headline, right? This is the unit economics breaking down. So that really breaks down the cost of goods versus the upside. And then that's really what's driving this flywheel. So I think if I'm looking at this, we're a company growing. We're a company learning as we go. I'll raise my hand and say, hey man, we've had to learn a lot of things the hard way here in the last 2 years. But I think, for us, it's knowing that we have a repeatable business model that definitely makes margins and definitely produces results. And we found out how to get those flywheels going.
I was just replying in the chat, but yes, thank you for expanding on that. And I gotta say, like, I have a lot of guests that come on here, and you really just nail it, man. You give the answer. You don't dance around, and I like that because you know your business very, very well. You know what I mean? Like, and having watched you for a couple years now, you know what you're talking about, and you're able to explain things, in a way that I think I understand. Like, I'm gonna go back on the business model. So if I'm understanding this right, and you could correct me if I'm wrong. Venues use your system, the fans engage, data is captured, and the artists benefit, and that feeds back into like more shows and monetization. Is that sort of how this works?
Yeah. So think about when's the last show you went to, right?
Oh my God, I can't remember.
Okay, yeah. So
last summer.
Okay, yeah. So you buy a ticket to go to a show, and the next thing you do, you're getting tickets from the ticketing company to go to 9 other shows at that same venue, right? Or you're getting emails from the venue, right, to come to the next gig. But really, if you went to that show, what did you love? You loved that artist, right? So what we've done is we've created marketing automation for the venue so that they can get you to come back, and that's a key component of it, but also for the artist as well. So by moving that data, they then are using the FanVivo platform, which are paying a monthly subscription fee for, right? And monthly subscription fee, instead of paying 5 different companies, they're only paying one, PickleJar. So we make it easier. The data is all in one place. You want to send a text message to everybody, do it. You want to send an email, do it. You want to post something new on social media, do it. It's all in one place, but it all feeds back into the ticketing. The ticketing or a tip, right? Those are the entry points for the fan. And once they're in the system, right, then the venue and the artist have complete autonomy to do with whatever they want to with that data, right? That's an important part of the entire process.
Yeah, and looking at concerts and stuff, it's amazing how much money is made off the back of a performer. It's really remarkable.
I mean, you just look at
it's wild.
Just look at the testimony in the DOJ case, right? It is incredible, and not to get down a rabbit hole in the secondary market, which we've never been fans of, no pun intended. It really comes down to, I can't market or sell that other product because it's already evaporated out of the marketplace. So I think with again, the industry changing as it has, these tailwinds we haven't seen in a decade, and our technology, our tech stack, which is proven over the last several years, is in a really good place. Plus the new MRR, the recurring software and advertising revenue streams that we built in. We really feel very confident about those over the next 12 months.
Right on. We have a question from Jamie. How many venues, clients, use VMS? And can you give a sense of geographic dispersion and typical size, capacity of said venues? You talked a little bit about this earlier, but could you elaborate a little bit more?
Yeah, so I'm not going for competitive reasons, obviously, I don't want to get into names and numbers, especially over the next couple of weeks, but happy to share some of that if you'll follow me or be on the lookout. But I would say that, let me say it differently. Of the VMS customers that we have, they're using, I'd say 50% of them are using more than one of the VMS products, which is critically important to our revenue side. We definitely are just getting out of the gate on the broadband offering, and really starting to learn that process. We think that's going to have a huge attach rate. So that's going to be a significant part of our future there over the next 3 to 5 years. And then I think going back to, I think one of the parts of that question was, where do we think it's going, right? How many, where do we think that scale is and what markets? Right now, we have focused all of our energies. I think last year we really cored up after last year. We are focused on Houston, Austin, Nashville, of course, Dallas, and then a number of venues, I would say, in the southern Florida area, right? Think Panhandle all the way down to the Keys. We have some really great. So Chad Thillenborger, who's our EVP of VMS, right? He lives in New Orleans. So that's a really great backyard market for him. And of course, 3 or 4 of our earliest clients in the VMS world were down there in the Florida Keys, in that area. So we love that market a lot. So I think Houston's our backyard here. So if you can't win in your backyard, you can't win anywhere. That's been our longstanding approach.
And rightfully so. I completely understand that. I want to thank you for coming on. Honestly, this has been a great time to sit down and talk with you. I want to give you a final word here to your shareholders, potential shareholders. The floor is yours, man. Go for it.
Well, I really appreciate, Eric, the time to come on today and talk with everybody. It's really a great opportunity for us and for our shareholders over the next 3 to 5 years to really take advantage of the tailwinds in our industry, and more importantly, help our artists and the live music industry as a whole. You've seen really through this DOJ, if you take 5 minutes and just read the excerpts from it, it really is devastating what's really gone on. And there's, of course, a huge amount of content online that are just horror stories from the industry. Is that all Ticketmaster and Live Nation's fault? Absolutely not. We love those guys. They're a really great business savvy there. But it does open the door for us, and that's the door that we're stepping through. And so getting behind us is really all about an artist's first mission. And if you'd like to learn more about who we are and what we're doing, feel free to reach out to us and go online and learn more. But more importantly, I'm always available, right? So I love talking to shareholders and love being out there in the marketplace. And so, Eric, it was an honor to get to be here today and talk to you and your people, and happy to share anything we can to grow this business and to make it a success.
Excellent. I look forward to having you on for an update in the future. Continue the success, and may 2026 be great to you guys. So keep up the good work.
Thank you. Thank you to you and your team. Appreciate you.
You got it. Now get out of here.
Get out of here. See you, man.
What a breath of fresh air. Jeff James, PickleJar. Stock's doing great. Company's getting their audits done. The audit's already done. 2025 is getting done. They have a lot in the pipeline. So if that one's not on your radar, it should be on your radar. OTCID, ticker PKLE. All right. Let's get into some due diligence. My voice is probably going to tap out at some point, just so you guys know that. But we're gonna pound through this, and we're gonna do what we got to do here. So let's get right into this. So, all right, I do want to talk about ticker KULR. There's nothing cooler than that. Okay, I'm gonna shut up with the dad jokes. I'm gonna be quiet. No, I can't ever stop those. So, all right. So here's the deal with Cooler Technology Group and why the annual report and the quarterly report actually tells a much bigger story than just a rough fourth quarter. Okay, so let's move along here. All right. First, before we get to that, I want to talk the stock. It's two's like the floor here, in my opinion. There's a lot of upside to this play, in my opinion, especially if they have catalysts and if they have the numbers to back it up as the year goes on. But if you zoom out, if you look, I think this is the 2-year, it's at the bottom right here. So if they could get their ducks in a row and the numbers start to look good and they start, expanding on their product-based model, which I'm going to talk about in a second, I think that there is a lot of upside here. And so this might be a potential entry for you. Remember, none of this is financial advice. I put that disclaimer on just so you know. All right. But I want to zoom into this fourth quarter. All right. Yeah, the fourth quarter alone, it doesn't look great. Revenue was down 15%, expenses went way up, and the net loss looks massive. But you have to understand what's really driving that number. A big chunk of that loss wasn't from the actual business. It was a non-cash hit tied to their Bitcoin holdings. So on paper, it looks ugly, but operationally, that's not the full picture. All right, so let's move in and let's zoom out, I should say, to the full year. All right, and it starts to make a lot more sense. Revenue was up 51% year over year. That's real growth. And even more important, product revenue is growing, which tells you that they're starting to move away from one-off projects and into something more scalable. And so I want you to keep that in your mind as we're going through this. All right. And I really, really like what's going on here. But what management is basically saying is this. All right. 2025 was a transition year. They spent heavily on research and development, on building out manufacturing, on engineering. And yeah, that crushed margins in the short term. Right now, their product margins are super thin, around 1%, but that's because they're still early, low volume, and they're building everything out. So I don't know. Here's where it gets a little interesting. All right. They're shifting to a product-led model centered around their Cooler One battery platform. This isn't just another battery. It's built for high performance, high-risk environments like defense, aerospace, and eventually AI data centers. And if you think those aren't coming, guess what? I know a lot of you out there hate AI. Some of you I've had conversations with, and you don't like where it's going. It's inevitable, and it's here to stay. So let's see how they could play into it. But that's where their edge is: battery safety and thermal management, which is a huge deal when you're talking about high power systems. All right. And they've got over 30 active customer programs in the pipeline, partnerships with companies like Amprius and Molicel. How do you say this word? Molicel. I'm going to say Molicel. Thumb me up. My gosh, can't say the word. And they're also leaning hard into markets where failure is not an option. And by the way, they're also leveraging their NASA-derived IP. Yes, NASA. All right, let's keep moving here. All right. Actually, I have a couple more things to say, all right, about 2026. All right, before I get to FDCT, I'm going to get to FDCT. So focus is the execution here. They want scalable production targeting up to 10,000 battery packs per month. All right, that's huge. And they want to bring in automation to drive costs down and improve margins. So they're well aware of what they're doing here. They're also consolidating operations to streamline everything and get more efficient. So I don't know. When you look at this whole thing together, yeah, fourth quarter looks rough, but it's coming during a heavy investment phase, a business model shift, and some non-cash accounting hits. And that's going to happen. So the real story is revenue is growing. The company is moving towards scalable products, and they're setting up infrastructure to support much larger demand. So if they can execute in 2026, especially on scaling production and improving margins, this starts to look less like a struggling company, more like one that just went through a costly but necessary transition. So I'm going to go on the side of, yes, you know what? They had some growing pains and consolidation or transition pains late in the year, but year over year still looks good. And you know what? Good businesses go through phases like this. So I'm all on board for KULR. And yes, now I can move ahead to the next slide. I'm going to bang through a couple stocks real quick. I'm losing my voice, guys. Losing my voice, losing my patience. I'm going to check, see if there's anything in the chat. Anybody in the chat? Come on. What are your comments on KULR? Sol 9241. Let me know what you think about it. All right. Let's go to FDCT. All right. Now the stock had a little bit of a surge over the last couple of weeks, tailed back and closed. I think it closed at 3.5. I pulled this chart about 20 minutes before the end of the day, so I don't know where exactly it closed. Just for the heck of it, I'm just going to check real quick so I could give you the updated number. Yeah, it was 316. So right there we go, right on the line. We could see a hard bounce. That'd be nice. All right, so moving out or zooming out, I have this line marked right around, let's see, 189. I have it marked right in that 2 cent range, right there. There's a lot of movement that could happen after it bounces off this area, and you've seen it multiple times. And so hard bounce there. 1, 2, 3. So this is a very tradable stock. But let's see what happens. I think we're getting to the big story in a second with this one. Let me just take a look here. All right. The low float held at DTC, 37 million. Share structure looks great. All right. Now I want to talk about the financial highlights here. All right. This is one of the reports where the numbers actually do the real talking. And I forgot who I shared the stock with. And they're like, wow, I was only trading, at 3, 4, 5, 6 cents. Well, the numbers look great. They just put up nearly 35 million in revenue. That's about 30% growth year over year. But the real story is the flip to profitability. They went from basically break even to 5.7 million in net income. That's a big shift. Margins are improving too. Gross margins are up to almost 55% and a 17% operating margin. That tells you that they're not just growing, but they're doing it efficiently. And the tech side is starting to pop. Software revenue has jumped over 200%, which shows their platform is gaining some traction. That's kind of high margin growth you want to see. The balance sheet, it's cleaned up. They eliminated their accumulated deficit, built a surplus, and now have over 22 million in equity. Cash is strong, and working capital made a massive jump from under 1 million to nearly 15 million. And then you add in the Alchemy acquisition, which is already contributing and expanding their global reach. This is looking very significant. If I'm a shareholder, I love what I see in this report. So when you zoom out, this is a company that's growing, profitable, more efficient, and financially stronger. So, and they're pushing towards an uplisting too. They're all pushing towards an uplisting, don't you know? But hey, keep that one on your radar. FDCT saw a surge in the pullback in the low threes now. Let's see where it goes, but this thing could bounce hard and, it's very tradable. All right, let's move on. DFTC, this was our recent addition to the BFC watch list. And this saw a really, really nice surge. Let's real quick. Let's see. Yeah, this is up nicely. We're gonna see. This is like a brand new play. So this is new. There's some good due diligence on this one. So what do they do? The Fentech, formerly Splinternet Holdings, is a developer and provider of rapid response software applications for the threat detection industry. The company offers a global management and alerting system which reacts to the detection of chemical, biological, radiological, nuclear, and explosive threats, as well as to data sent from other types of sensors. The Fentech technology detects the threat and notifies key personnel and first responders so that appropriate action can be taken. The company is also moving to make strategic acquisitions in its historical markets. This is a beautiful share structure. The market cap, 5.8 million. And you have an authorized shares of 250 million. And at the DTC, you got 49 million. Low float, this thing moves like a hot knife through butter. All right. I don't know. You can't see anything. Oh, are these my new slides? Oh, yeah. By the way, before I get into the convertible note, Paul Bremer is on the board. Now, if you don't know who Paul Bremer is, I got to say, like, he's the guy that announced we got him. The guy that announced when they caught Saddam Hussein. And so pretty cool stuff. Actually, I had his bio pulled up, but it's not showing. Son of a gun. You know why? Because I just added that in. But yeah, Paul Bremer, look him up. He's on the board. Major connection there. What does Jamie say? FDCT is notably underpriced, market cap, price per share. When looking at those 2025 financial highlights, under 4 times net income. Yeah, ridiculous, right? So ridiculous. So wish I could have showed you Paul Bremer's picture, but I messed up. I done messed up there, Ron. I gotta have a little fun. Gotta have a little bit of fun. All right, let me take a look right here. I'm just checking something out real quick. See, you got me doing live due diligence here, Jamie. I'm looking at something real quick. Hang on. There. I have the other stock bullet. I have another screen where I have my OTCM held up, but all right. Okay. Moving on. I'm not gonna get any distracted anymore. So Jamie, thanks for your comments tonight, by the way. Oh yeah, look at this. No convertible debt. No wonder why this thing moves so easy. Brand new stock. Oh, by the way, they're on Twitter, so make sure you give them a follow. All right. And here is this PR. You know what I don't like is when they put out the PR and it's a PDF. That drives me nuts. I wish you could just, I don't know. I don't know why that, because I like to copy it and, put it in my notes. But all right, no more complaining. I'm just glad they got a PR out. But let's talk about this deal. This deal matters because it helps fix one of the biggest problems with AI. All right. So you can't always trust what it spits out. By adding Kivu's tech, DefenTech can now double check AI decisions in real time before people act on them. That's a big deal in security and emergency situations where getting it wrong isn't an option. The bottom line, their system is smarter, safer, and way more valuable going forward. So yeah, this is going to be significant for the industry. So yeah, Jimmy, what do you think about this one? That's what I want to know. What do you think about this one? But moving on, give them a follow on Twitter. All right, they've been active on their Twitter account. I think they're doing an updated website too, and so make sure you give them a follow. All right, give them a follow, and that's it. So keep this one on your radar. It's nice. The stock has moved very nicely, but we're going to see where this goes. We're going to see how the story develops, and we're going to see how significant of a move and businesses acquisitions that they bring in. I'm excited to see how this one plays out. All right, moving on. Ari, I'm jumping the gun on my slides today. I am. All right, so I talked a little bit about this one last week. I'm not going to spend too much time on it because the company has a lot to prove. This is the BFC Lotto. It's a trip one stock. I've seen it move hot before. We did a Spaces. That thing moved to trip 5, trip 6, and now it's back down here. But let's get into the most recent news. All right. So they announced CEO candidate discussions and continued strategic progress. Ari confirms that formal discussions with multiple CEO candidates will begin today. The company is actively seeking, but not limited to, candidates with deep expertise in the oil and gas sector, as well as broader experience in scaling energy and infrastructure focused businesses to guide its next phase of growth and execution. All right. And they went on to talk about their Moldova-based assets and broader oil and gas strategy. They talked about getting a new website, improved social media management and communication structure, and clear presentation of business segment strategy and shareholder updates. So many of you have reached out to me to be like, what the frig does this company do? What does Ari do? And I say, that's a really good question. And then I try to explain it and I can't. So I think they're going through a growth phase. I think that they're trying to bring in people that can really build the story to the stock and be able to describe it to us, the shareholders, so that way we better understand it. I like this play. A little bit of a heftier share structure if you take a look at it. But, I think that we're, hopefully going to be seeing some updates from these guys. And it did mention the company also wishes to provide additional clarity to shareholders regarding its capital structure. Since then, somebody posted that there's a claim to a convertible note out there, but it's never been on the filing. There's never been a convertible note on these filings at all. I'm keeping an eye on that, and I want to see how that plays out. It's always juicy drama in the OTC. Somebody commented on one of my posts, and they go, can you actually cover all the companies cover billions of shares, and some of the CEOs are scamming? It's the OTC, boneheads. That's welcome. You want to get down and dirty? Here we are. It's the OTC. This is the high risk part of the stock market. It's all risky, but listen. Oh my God, you covered a stock with convertible debt. Okay, so what? You know what? The truth is, there are thousands of companies out there, and I'm going to cover as many as I can. And you know what? Some of those companies with convertible debt, with large share structures, sometimes they go up 1,000%. So you got to do your due diligence, and you got to throw your hat in the ring. And that's what I'm doing. I'm going to keep doing it. And guess what? If I'm invested in it, I'm going to cover it. So tough shit. Suck it up. All right, moving on. CVAT. All right. Not much to cover here. We've covered it before. If you're not following Cavitation Technologies on X, on YouTube, make sure you do it. They're very clear. They have this huge buyout that's going to be happening. They just confirmed that EGS has demonstrated access. They have proof of capital for up to $45 million, fully covering the proposed transaction value. Documentation also indicates the potential for additional financing capacity subject to structuring and approvals. And Neil was on the show, and just go on the YouTube channel. I have a whole interview with him, an update after he got back from Switzerland and discussed. He went with EGS. They did all kinds of presentations, and they're working this deal. There is a lot of room for growth. And guess what? They're going to pay for the valuation on their subsidiaries in Alchemy and Zyra. So there could be a bigger deal. So right now it's proposed at 13 cents a share, fully diluted. We're going to see where the end value, when it happens. Wait, I gotta wait. Hang on. Give me 1 second, Jamie, because I just popped something in. He's going to do what he did to me with the last stock. That's why I'm getting confused. Cheers to you, man. Always good to talk to you. But yeah, so that's a good one. Keep CVAT on your radar. SFWJ, I just wanted to do a quick little follow-up on this one because I really like Gabe Diaz as a CEO. He's not an amateur. He's done private companies before. I think he's doing a hell of a job running his company. And on the business side of it, it's nice to see a stock. Now, this one's beaten up, so this is a perfect buy, in my opinion. I bought it down here. I own the stock. I'm going to probably purchase more of it. But I will say the business side of it, he's actually executing. And I'm really excited for the financials. I want to see quarter one. I think quarter one could be huge. And I think they're going to have one hell of a year. But he did just post on LinkedIn, and I saw this. Yesterday, I had the honor of ringing the opening bell at NASDAQ. A special thank you to Steve Anchorstar for this incredible opportunity. If your money manager hasn't rung the bell 4 times, it might be time to have a conversation with Steve. So there he is, the one and only Gabe Diaz, and a couple other pictures here. But yeah, shout out to you, Gabe. I'm glad you had a good time. Congrats. Good stuff. Good stuff here. All right, Jamie, back to you. DFTC, in the latest annual, Paul Brenner confirmed as chairman and owns 1 million of common shares, 1.2% of class, undiluted. Well, isn't that something? Juicy, juicy, juicy. We're going to see how that one plays out. Guys, that was a really nice interview with Jeff James today. So listen, those are some of the stocks I'm watching. KULR, FDCT, DFTC, RER, BFC Lotto. Hopefully they get it together. Come on, guys. CVAT, lots going on there. I think that if they execute this buyout by the end of the year, I think that'll be a huge win. I'm surprised there hasn't been more volume into the stock, to be honest with you, with that news. But hey, for the people that love it and want to invest in it, perfect buying opportunity, in my opinion. Not financial advice. All right, don't say he told me to. He told me to do it. That's why I lost my money. Shut up. Come on. It's risky, guys. This is the OTC. All right. It's the Wild West, baby. That's it. All right. That's all I got. I hope you guys have a great Monday. I'm going to go save my voice. And listen, if you're watching this afterwards, like and share this. If you're watching this, repost this so that way that interview gets out there and this due diligence gets out there. That's all I got. Remember, guys, there is more that binds us than breaks us. Hey, peace out.